Hey, this will be a video chart on PIHN, Polaris International Holdings Incorporated. Did this one a couple weeks ago, I think, and want to get it back up here as the requests have started to pour in. I think some people are in freak out mode a little bit, and depending on what your strategy is, maybe you should be. And what I mean by that is if you are a day trader and you bought up here, then yeah, you should probably be panicking quite a bit because you are down a significant amount on your position. Now, if you are in this for a long-term trade or are holding this as a swing trade, things are still fine, and I'll explain what I mean by that. So, I've been getting a lot of questions that have asked, am I in trouble? Am I in trouble? And that's a hard question to ask because you need to first ask yourself, what is my strategy? And if your strategy going into the trade was this is just going to be a quick day trade and you bought up here, then yeah, you should be worried. But if you are somebody that's holding this for a longer term, you're still the bulls are still in charge, and your support levels that you want to see hold are still holding. And as long as that's the case, then the chart will remain in your favor. Now, the thing that I want to first point out is our moving averages. We have this greenish line here, which is our 200-day simple moving average, and this is going to be the key one that we want to watch. But we also have this red line here, which is the 20-day. And yes, the price didn't quite hit it today, but got pretty close, and then saw a little bit of a bounce. So for the longer term players out there, the key level that you want to see ideally hold is going to be this red line here, once again being the 20-day simple moving average. If that one cannot hold, then what I'm going to classify as a must hold level is going to be right here, the 200-day simple moving average. Currently it's valued at 0.0011. So if this level can hold on any sort of pullback, then things will remain in the bulls' favor as that'll show that the bulls are continually holding and starting to build higher bases. Now, preferably, what we'd want to see happen is for this level right there to hold. If the 20-day can hold, then that's even better yet because that'll show that a higher base has been formed and really kind of demonstrate that there's still plenty of people willing to accumulate shares here at higher level. So now that we know where our support levels are, let's talk about a few of the resistance levels that the bulls are going to need to get above on any sort of bounce. The first one that's really sticking out in my mind is this previous high right here. It was also a couple of highs acted as resistance and then support again, and then it finally fell. This level is at 0.0019. We also have a little shorter term resistance being this blue line here, which is the 10-day simple moving average. You can see it's curled over uh, and it's starting to go down. Nothing significantly to worry about, but right now that's valued at 0.0017. So 0.0017 and 0.0019 are going to be the key resistance levels that the bulls are going to need to get back above with any sort of bounce. And if they can do that, and you see volume start to increase, then I don't see why it wouldn't be able to get back up here and retest these highs again. But for now, everybody's main concern should be what sort of pullback is this going to be? Is it going to be a healthy pullback? And once again, a healthy pullback meaning that this 200-day simple moving average holds, or is it going to be more of a reversal type thing where it starts to drop below this and then keep on heading down? Right now, you can still chalk it up as a pullback just because it's still above the support levels, but that could very quickly change to a reversal if these support levels all begin to fall quickly. So to repeat myself, I'm not saying we're in a reversal now. We're still in a technical pullback since we're above our moving averages, but we do need to keep our eyes on this and make sure that this pullback doesn't all of a sudden turn into a reversal on us. So that's the main thing right now. What wouldn't hurt is just to get some stabilization days, some sideways days, and then hopefully maybe next week see things kind of kick back into high gear here and start to head back up. The one good thing about this overall kind of pullback is we are seeing volume head down, which is good. We're not seeing a bunch of huge red volume days or anything like that. But just keep your eyes on volume, and once again, with any sort of upwards move, we want to see volume ideally start to increase. So if there are any other questions on the chart, please let me know. If not, I'd encourage you to check out bullwarriorstocks.com. If you go there and sign up for the free newsletter, you'll be sent a free ebook, and with your newsletter subscription, you'll get chart setups, trade ideas, educational pieces, all sorts of things from big boards down to penny stocks. So there's a good variety and something for everybody. It's all free, no strings attached, so it's worth at least signing up and giving a try. One more time, this was PIHN. Thanks for listening.